in here. That's pretty cool. Let's see here. Let's talk a little bit about retail today. For those of you who don't know, I do work at a retail lumber yard. I do retail sales for a living, and hardware is our main product. That's really what we sell the most of. Is like a lot of bolts, a lot of screws, a lot of paint, a lot of plumbing parts, everything that you would use to either maintain a house or build a house or just, replace the broken parts for toilets or whatever. That's what I do. I sell those types of pieces. And over the last couple of years, we have experienced some serious shortages when it came to our orders. When we would place an order for stock items coming from the warehouse, when you ordered 150 line items, you would expect to get 97% of those items. Like, there would very rarely would you see back orders taking place. When the shortages really started kicking in, when the pandemic was in full swing and the stuff was not being distributed evenly throughout the nation, especially the stuff that was coming from China being locked up at the ports and stuff, that's when we really started seeing a serious issue when it came to the stock orders that we would bring in. We would be lucky to get 30% of what we were ordering. And something interesting that I was talking with the buyer about, the guy who buys for the store, is that he said that the A item list, so you have your A items, your B items, C items. The A items are stuff that you turn over every single week. Like, you order it on a regular basis. And the A items that we had on the list were always in short supply, always. And so we wouldn't bring them in. And this is what was really interesting, is that the computer algorithm that we use, when you start selling a lot of a particular product, it realizes that the algorithm picks that up and then has you order more. So, your shelf is always stocked, because it's basically saying that, hey, you got a lot of demand for this particular product, you need to carry more of it. Well, something on the reverse also happens, is that during those shortages and we were not getting in those A items, the computer algorithm picked that up saying, hey, you're not selling these particular things. And those A items started dropping off the list. And so now the rate of fulfillment on those A items is starting to increase. But it's not really increasing that much, as the A items are actually falling off. So instead of having 100 A items, you may only have 50 A items on that list now. And even though you're still only getting 30 products or 40 products in, as opposed to getting 100% of those, now your rate of success is up around 90%. But really what has happened is that most of those A items have fallen off the list. You see what's happened? So a lot of times you'll hear the inventory levels are starting to show signs of relief. But that may not be the case. It just may be that the A items have just completely fallen off the list completely, and now the items that are left that are able to be fulfilled are starting to fill in the fulfillment. I'm having a hard time talking. Getting the percentage of fulfillment to increase. Does that kind of make sense with happening there? So I'm starting to think about this when it comes to when you're hearing the stories out there of people saying that the inventory levels are beginning to rise or starting to come back into supply. Is it really is the inventory really coming back into supply, or are all those A items that have come up in short supply just basically being forgotten about, and what is being available for supply increasing that fulfillment success ratio? Anyway. It was something that I noticed here, and I was thinking about it. I was having a conversation with the buyer earlier today, and I just thought that was kind of an interesting thought. But what is taking place is that there is actual inventory starting to fill the big box stores. The Walmarts, the Targets out there, they're starting to become overloaded with inventory. And you can start to see the effects of this when it comes to the liquidators, the liquidation warehouses out there, who buy up all the returned items or overstocked items or things that are just not selling and need to move. These liquidators are picking it up and selling it for a really cheap price. Take a look at the description I leave down in there or take a look at the links that I leave down in the description for you guys. And you can see some of the articles in there explaining just that. And so this is something that I knew was going to take place, is that during these shortages, when we had the issues with distribution throughout the nation, we had what ended up going on was that we had allocations, and then we had an issue with people trying to order more than what they would typically have ordered because they were being allocated against, or it was taking forever for it to arrive. So they wanted to make sure that they had plenty on the shelf. Now, this over ordering is not exactly clear throughout the distribution network, and that's really what the bullwhip effect is all about. Is that at the end results, like at the end retailer, when they start increasing their orders because they are being allocated against, or that it's coming up in short supply as far as length of time it takes to actually acquire those items, when that starts to take place, they start ordering more, right? Like, for example, we had a trim here that, and this is an example I've used many times, we had an exterior trim, a 5/4 by 4, that typically we would order like 30 pieces of this stuff for stock. Well, when we called the supplier, they said, well, there's a short supply of this stuff. We have to make sure that everybody can, have a little bit of this product out there so they can sell it. Instead of getting the 30 pieces that you're ordering, we're only going to send you 10. Well, we realized, 10's not enough to fulfill the orders that we need to do. So we don't actually need 30. We need 100 pieces. That's what we really need. Well, we knew that we were going to be allocated against, right? So when we order 100, we were hoping that we may actually get 30 that we really wanted. But the distributor, they didn't realize that that's what we were doing, right? I mean, we would take 100 pieces if they sell them to us, we would just eventually sell it all. But we really only wanted 30 for stock, but we ordered 100 so that we could get our 30. Well, once they get that order, that starts going through the distribution network all the way up to the manufacturers, who are looking at all these different stores who have all these orders for like 100 pieces when really they only wanted 30, but they don't know that. So they start pumping out a lot of material to try and fill in these 100 piece orders that are out there. But by the time they start getting it into the distribution, they realize, oh man, that's way too much stuff. The retailers really didn't want that much. They're going back down to the 30 piece orders again. And now all of a sudden there's all this inventory out there. And that's really what I feel is happening throughout most of the industries out there, especially when it comes to the non-essentials. All the TVs, all the furniture, all the clothing, all the kitchen equipment, stuff like that is not exactly like things that you absolutely have to have in order to survive. Now, during the pandemic, everybody was bored, so they bought all this stuff up because they were locked down at home. But now that things are opening up again, as far as like, people being able to travel and do whatever they want, they don't want like new furniture at home. They want to go out and experience things. And so that's really where the transition is starting to happen. People don't want all this stuff that is now flowing through the country. They want to go out and enjoy themselves. And now the retailers are going to suffer the consequences from all this. And that's what we're starting to experience right now. You give it some time and you're going to start finding that everything as far as a non-essential is going to become very cheap, especially once the ports and all the trucking and all the rails start to free up. You're going to find this, like, inventory levels are going to be in massive supply all over the place. And that is going to have a flip consequence on top of that, as the lack of orders coming in is going to create the manufacturing gap. And that's something that we're starting to see take place over in China right now, is that their manufacturers are getting damaged pretty heavily from the lack of orders coming into them. And that's because of all the supply that is now existing here. So this is the bullwhip effect, going from oversupply to undersupply to oversupply again. Now, that's the problem that I really feel is going to take place here, and I don't know how long it's going to take. But at some point, all this inventory that is oversupplied will eventually find its way through the system, and there's not going to be a whole lot of manufacturing coming in to back that up. That's when the real shortages are going to kick in. Yeah. Okay, so I've been babbling on long enough. What are you guys talking about? All right, what do you think about the new cars and used car prices? That's a really interesting one to look at, because it seems that the used car prices are still quite elevated, although they are coming down. I would honestly want to see more repossessions, more people defaulting on their loans. I don't want to see that, but that's what I would look for to see car prices coming down. Once you start seeing a lot of that happening, then I can imagine that you're probably going to start seeing the retail end, like the used cars and everything else, start to come down as far as pricing goes. But everything I see right now, and as far as like what I've experienced out there, it doesn't seem that there's a real dramatic drop in the used car prices, although from what I hear, they are starting to happen. And I did hear a couple of people tell me they got some pretty good deals at the car dealerships lately. But then again, that's only kind of isolated stories that I heard about. Do you think the car market will have a bullwhip effect? I think that once the chip shortage comes to an end, that all these vehicles that have been sitting waiting for chips to be, so they can complete the vehicles and get them out there to the public or out there to retail. I think when that starts to take place, there could be a little bit of a bullwhip effect going on with it. But right now, we can already see that there's a lot of pullback in the manufacturing of new vehicles right now because of the oversupply of incompleted vehicles that are out there. So it's going to be interesting to see how that car market actually plays out once all those incompleted vehicles get cleared out of the system. I would be concerned about like buying one of those incompleted vehicles just sitting around for who knows how long before they actually, have the rest of the components to finish them. Makes me wonder like how quality of a vehicle is that. What are your thoughts on the stock market? Is it something to get into in this economy? Yeah, I really don't give investment advice, so it would be really difficult for me to try and say, yeah, go for it, go into the stock market and play that game. I honestly think that cash is a better position to be in right now, just because I think that there's going to be so many better buying opportunities coming into the future. So long as the Federal Reserve continues to push the interest rates higher, at least with the idea of the interest rates going higher, I don't think that the stock market is going to rally like anything significant. I think we would probably have more selling pressure coming from that. So I would not really be personally, I'm not really excited about going into the stock market at this time. But with that being said, I mean, there are industries that I think are probably fairly good places to go to as far as investments if you really did want to get into an investment. And not that I'm a believer in the green energy or green movement or anything else out there, but it definitely seems to be something that is being pushed out there. So if you just kind of just take that into consideration, there are some industries out there that I think are going to do quite well from that green movement. And cross-laminated timbers, I think, is probably going to be one of those industries. This is where they build like high rises and apartment complexes and office buildings all out of wood, completely 100% wood construction. And I know a lot of people are thinking, man, that sounds crazy. I mean, what about the rotting? What about the material actually rotting, like just degrading, bug infestations or fire damage or something like that? And really, these cross-laminated timbers, they have done a good job as far as taking care of the issues with fire and bugs and deterioration. And on top of it, they're pushing it as a green product because ultimately all the carbon is locked up in the trees, and then unless you burn it or it rots or degrades or something, the carbon doesn't really get released until it, like I said, until you actually burn it up or something. So they lock that carbon up in these cross-laminated timbers, which then goes into the building, and so like you got your carbon locked up inside that building. Again, like I don't know if that's necessarily something that you would agree with or disagree with. That isn't really the point of it. The point is that the green thing is being pushed, and this could be an industry that actually benefits from it. I mean, how many like industries out there do you know of where they can cut down more trees and that be considered a green product that comes from it? I mean, pretty interesting, I thought. So anyway, cross-laminated timber industries could be a good way to go. Hey, thanks, Jaws. Good to see you here. $4.99. Thank you so much. No time to watch today. We'll check it out later. Take care, UE. Well, thank you so much for the $4.99, Jaws. It's very nice of you. Thank you. Lumber won't move on price. Markets have failed. I don't know. We'll find out. I'm going to talk next week with Keta from Madison Lumber, so I'm really excited about that. We'll find out a little bit more about the lumber industry when we talk with her. Let's see here. A grade pot went from 3,600 in the 90s, 6,000 in today's dollars, down to 300, 800 today. Outdoor is almost free. Yeah, it just kind of goes to show, like, I mean, talking about the weed industry there, you know, weed is essentially worthless. I mean, I know a lot of people will probably shake their heads at that, but there's really nothing to it. It's just a plant that grows. I mean, anybody can really do it. Now, it does take some skills to grow high quality, abundant weed or something like that, but for the most part, most of the time, weed is just that. It's just a weed, right? So you go put a seed in the ground and it grows some pot. Now, here in Oregon, like weed has always been no big deal. Like even just the possession of less than an ounce, it was a misdemeanor. I mean, you paid a fine and they let you go on your way. Nobody went to jail. Nobody lost like their livelihood or anything else because of it. I mean, if you were selling, that would be one thing. But just the simple possession of weed was never a crime in Oregon, and it was never a big deal. Like weed is just not a big deal here, but it was expensive when it was illegal. And that's the thing about it. Like you take something that somebody wants and you make it illegal, you will add a lot of value to that. And that's like just about anything out there. I mean, sex, drugs, guns, it doesn't matter. It's like if you take something that somebody wants and you make it illegal, you will definitely increase the price. That's why, like, when people say they're going to make Bitcoin illegal, I don't think they will. Like, if you take something like Bitcoin that people want and you make it illegal, it'll just make the value of it that much more. With risk comes reward. So the higher the risk, the bigger the reward from it. All right. Retail glut. Yeah, that's what it's going to be. So legalize or decriminalize. Yeah, I mean, it should be that way. Like, people said that Oregon was going to fall into like, some kind of crazy nut job land or something. I mean, it already kind of is, but because of the decriminalization of drugs, right? So if you have possession of even hard drugs, it's like again, it's not something that they're going to arrest you for or do anything about really. For the most part, they give you a fine and then they send you on your way. And then from what I understand, you don't even have to pay the fine so long as you call and deny the request to like get rehabilitation or something. I forget what the rules are behind it, but for the most part, like possession of even hard drugs here in Oregon is hardly, punishable by anything. And I mean, yeah, there's problems with it, and I've talked with the police who say that it is an issue as far as not being able to do anything about it. But like I don't really see how it changed anything. Like I don't see an increase in crime. I don't see an increase in like issues coming from it. Everybody who was doing it anyway. And other than being a little bit more like exposed like out there so you can actually see people, doing it, which is kind of a pain, but I don't see where it really like changed anything here at all. Like at all. Hey, thank you very much, Nate, for the $5. They just added mass timber to latest codes over the last few years. The issue is you need cranes. Stick frame still rules, but CLT has a future. Yeah, well, I mean, when it comes to like, I guess when it comes to building apartment complexes, stick built, yeah, where you just basically pack the studs up and plate material up and you stand your walls. Um, Cross-laminated timbers does need crane. I mean, it's definitely big pieces that isn't going to take like a couple of guys to pack around. It's going to definitely take some serious equipment to do it. But with most like, you know, fairly decent sized construction buildings, especially when it comes to like high-rise kind of style, most of those are done with cranes, aren't they? I mean, they usually have some sort of crane type, type of equipment that usually runs the material up to the higher floor. So I could see where like it isn't exactly the most, it may not be the exact easiest for location purposes to do cross-laminated timber, but I don't see where it's really going to be like denied, as far as just because you have to crane it around. But you're right. I think stick built is far more efficient and easier. Housing glut. Yeah, I'm still curious about that one. I mean, there's definitely the inventory levels are rising, but is it really going to turn to a glut? I mean, I guess it would be a glut considering a tight housing market, but are we really going to go to a glut when it's like if you considered like a normal housing market? Like what would normal be anymore? Because nobody has experienced normal in the last few years. How would you even know what normal is anymore? So I mean, to me, like I still think, and from what I see in my area, it still seems like although there's a lot more than there was last year, I still don't feel that there is like this overload of inventory when it comes to housing. I know a few people who are trying to sell their house right now and they feel a little discouraged by it. They've had quite a few viewings and no offers coming in, so that is a sign that things are definitely changing as far as the housing market goes. But I mean, going from like an incredibly hot market to a normal market, I can see where a lot of people would misinterpret that. Like, they would feel like, seeing the inventory levels rise, you're like, oh my God, look at all these houses that are for sale. But, you consider that there was hardly any houses for sale for the last year. Is it really that big of an inventory? I feel like feelings get in the way of looking at markets rationally. Well, they certainly do. I mean, people want to see their portfolios increase or not decrease, and so they'll be wishful thinkers and stuff. Um, I think a lot of people get into that kind of thing where they trade on emotions instead of like logic, and I think a lot of people end up getting hurt that way. You see that article in CNN covering Target? No, I missed the CNN one. I don't know, maybe I saw it. All Nighter, how are you doing? Yeah, where is All Nighter, man? I didn't see him in there. Oh, there he is. Hey, All Nighter. All right. Stuck people do scary stuff. Yeah, that's for sure. Everyone got fat in the last few years. I wonder how much extra weight is being carried. Huh. I didn't think about that, but I mean, I could see where that could be the case. People not leaving their house and end up gaining a lot of weight. Yeah. We could build a million houses and the market wouldn't move. There are no markets when 1% of prime control all the wealth. Yeah. That's another thing. Like the replacement cost of building a house. That's another thing. People are, they say like house prices are going to crash to whatever. I mean, it could. I'm not saying that housing prices or home prices couldn't fall and fall dramatically. But the replacement cost of a house right now is still quite expensive. I mean, the lumber has come down quite a bit. And from what I understand, in many places in the country, it's coming down dramatically. But still, like everything else is still quite expensive. I mean, I was just pricing out exterior doors for a gentleman. And I remember there was a time I could sell like just your standard 6-panel, regular old entry door for like, 250, $300. I mean, that wouldn't be too out of line. Now they sell for like $800. It's just like unreal. And that's the case for a lot of material out there. Although the lumber's come down, most of the sidings, most of the stuff like doors and windows, paint, all that other stuff is still quite expensive. So the actual cost of building a house, I don't think that's going to come down significantly to make up for the fact that people are expecting like this dramatic drop in the housing market. Like, I don't think those two are going to jive together very well. All right, labor market not coming down yet. No, give that some time. You're going to find although a lot of people have moved into junk bonds just recently, which has given a boost to a lot of those like zombie companies and stuff out there. Give it some time. The interest rates are going to continue to rise, and it's going to put pressure on a lot of these companies out there who pretty much wouldn't exist if it wasn't for ever increasing amounts of debt or not being able to pay their bondholders without taking out more debt. I mean, when that situation starts to come up, then you're going to start seeing the layoffs happen. You're going to start seeing these corporations selling off their assets. You're going to start seeing things like what's happening with the property developers in China, like with Evergrande. When you start seeing that kind of scenario taking place here in the United States with the corporations, you're going to find the unemployment rising, and that tight labor market is going to disappear, and people will take any job for any pay at some point. No more mail call. Are you telling me not to do mail calls anymore? Why? All right, I own the east side of town, and the development that is engulfing me just put in a bunch of roads. All the license plates on the cars moving into these new houses are from out of state, from Minnesota, Maine. Where was that? Let's see here. Let's move on. If Powell doesn't make market panic, then printing money won't be appreciated. I don't think Powell does anything. Like, Powell is just nothing more than words, right? And I don't look at Powell as any kind of decision maker or anything like that. The only thing he does is open his mouth up and talk about what the FOMC is doing, which is the Federal Open Market Committee. They're the ones who really conduct monetary policy. They're the ones who are sitting in the back rooms discussing and talking about the game plan. when they put out their idea, it's Powell who is voicing that to us. So a lot of people will point the finger at Powell saying he's the problem. Like, remember when Trump was pointing his finger at us saying he wanted to fire him because he wouldn't do what he said? It wouldn't matter. Powell doesn't do anything. He's just part of the FOMC, and he voices, he's just the voice for him. So you can't blame Powell for anything. If you're going to put blame on the FOMC. That's the real problem. So focus in on them, not on Powell. But I mean, I guess there was a little bit more of a point to that, wasn't it? If Powell doesn't make the markets panic, then printing money won't be appreciated. Yeah, I guess that's true. I mean, if the market panics and everybody starts to sell off and it starts causing a huge downturn and the layoffs start to kick in and businesses are starting to shut down, then yeah, I guess that would be a panic. That would give the FOMC and the Federal Reserve that ability to have an excuse to start going into money printing again. But I don't think that's what's going to happen. I don't think the Federal Reserve has any plans to fire up that money printer or go into anything easing. I think they are going to continue to tighten. They are going to continue to raise the Fed funds rate. I think they want to get that they would love to get it up to around 5%. I doubt they will get it that high. I mean, they may get it to 3.5%. That might be where they end up with it. And at that point is really where the economy is probably going to start feeling some pain because right now they're at neutral, right? That's what they say, they're at neutral. And that is not accommodating nor restricting the economy. But once they get it over neutral, that will be restricting the economy. And they want to restrict the economy for some time, right? They want to bring that inflation down to the 2% target, which I still don't understand why they say that because they said it a while ago. They're not going for a 2% target. They're going for a 2% average. But they want to go for that 2% target, and that's what they want to shoot for. And until they get there for some substantial amount of time, whatever that means, then they're going to keep the interest rates elevated. I mean, so right now we have inflation running at like 8% or whatever it was. I forget what the last numbers were, but it doesn't matter what it is. It's still way above their 2% target, whatever that means. And so therefore they're going to keep the interest rates elevated. And I don't care what happens inside of the markets. I don't care if there's a huge downturn or anything else out there. I mean, it doesn't matter. Like, the Federal Reserve does not care about what's happening with the markets. They don't even care about what's happening with house prices. Like, none of that stuff matters to them at all. The only thing they really care about is to make sure that the markets don't freeze up. And I mean the financial markets don't freeze up. If there's somebody out there who wants to get a loan, whether they can actually afford it or get it, that's different. But if there's somebody out there who wants to get a loan, the Federal Reserve wants to make sure that the conditions of the economy will allow that to happen. Like, they do not want the credit markets to freeze up, and that's the only thing that they're really concerned about. If they can get their Fed funds up to 5%, then they would have some ammo to combat the next recession. So if they could get it to 5%, they would probably absolutely love that, but they're probably not going to get there. They're going to get to like a 3.5%, and that's probably as far as they're going to get before they start really damaging the economy. And they're probably going to hold it at 3.5% or somewhere right around there. I'm just guessing at the 3.5%. They're probably going to end up holding it there for a long time, like 6 months or something like that. And that is so they can see like what it is that the economy is doing, because when they lift the Fed funds rate, it takes 6 months to a year before that really starts to impact the economy. We were talking about it the other day, how there's a lot of economists out there saying that the Federal Reserve is not in control of the ship, and saying that the lifting of interest rates had happened after the markets had already started to react, right? But the problem with that argument is that the Federal Reserve was using forward guidance. They were jawboning. They were using credible threats. And so they were telling the markets, hey, we are about ready to lift interest rates. We're going into, monetary tightening. We are going to do this coming into the future. And the market started to react to that information. They started conditioning themselves to be there before the Federal Reserve started doing anything. So for this, for economists to come out and say that the markets were behaving before the Federal Reserve, that's not true. The Federal Reserve was using their main policy tool of forward guidance or credible threats to move the markets before they did their Fed funds rate. So there's a lot of economists who are still missing that. They don't seem to take in that little bit of information into consideration. All right. Let's see here. Let me move back. Higher interest rate is a fiscal injection. More money is being pumped into the economy. Yeah, in the longer run, that's actually true. Because we talked about that. Like low interest rate, like a low interest rate environment, or even negative interest rates, is actually a deflationary scenario, and it's over time. And I think probably the easiest way to kind of understand that is to go back and think about like during the early 80s when interest rates were incredibly high. And so here you had these US treasuries, like the 10-year treasury was trading like, I don't know, had a yield of like 10 to 15% or something like that. So here you had this 10-year treasury at 15% yield, and you had $1 million, like somebody gave you $1 million or you inherited $1 million. You could loan that $1 million to the US government and get a return of like $150,000 a year. I mean, that was pretty good. Like for $1 million investment with the government, you could, spend a lot of money into the economy. I mean, buy houses and cars and go on vacation and, spend that money. It was a pretty good deal. Now you take $1 million, you invest it with the US government, and you may get what, $28,000 if you're lucky. I mean, $28,000 today is hardly anything that you could even live off of, let alone like try to live off of it, even though you have $1 million investment going. I mean, that's like, it's almost ridiculous. So that money's not being spent into the economy. So it is something to consider that higher interest rates are actually better for the economy because you get to spend more money into it. You get a better return on those interest rates or on those investments. But at low interest rates, the return on capital investment actually goes negative because by the time you get your money back out of it, you have lost the purchasing power to inflation. So low interest rates are actually like counterintuitive to increasing the economic output. Does that kind of make sense? I don't know if I explained all that right, but basically low interest rates denies you the return on capital investment and actually goes negative against the inflation. Yeah. Anyway, let's move on. Wow, there's a lot of you up in here. All right, 424 of you. Go and please hit that like button. We'll get more people up here in the chat. If you hit that like button, the YouTube algorithm will pick it up and start spreading the video around more for more people to come in. All right. Let's see here. You're building multi-story mansions. I'm not sure who he was talking to there. Okay. They don't teach economics in Canada at all. Laugh out loud. Got to self-teach or learn on YouTube. Well, it's not just Canada. I think they do that on purpose all over the world. And they do it because if we truly, as a people, understood the financial system and how it operated, I think it would fail almost immediately. I mean, if people truly understood how fiat currency works and I mean, for lack of better words, the enslavement that it does, the debt-based system, if people truly understood how that worked, I doubt that, the system would continue to carry on the way it does. I mean, even Henry Ford said it, that it's probably better off that the people don't understand our financial system because if they did, there would be a revolution by morning. I really do believe that. I mean, once I kind of figured things out, I didn't want any cash. Like, I didn't want my cash in the bank. I didn't want any of that stuff. I wanted to get into silver and, physical possessions. And that was the way I wanted to be. And that's kind of the way you end up feeling when you first learn into this stuff. When you first start figuring it out, you're like, whoa, man, this is like a huge scam, right? And you didn't want to be part of the scam anymore. But as time kind of goes on, you realize, it's just like, well, shoot, if you ever want to try and get a house or get a car loan or even participate in the system, you have to actually be part of it. But it doesn't mean you have to be reliant on it or that you have to, like, not do things that are outside of that system. I mean, that was the main reason why I ended up buying into silver as much as I did, is so that I could have something that was away from that third party, away from the banking system, away from anybody else out there. I was in control of my own wealth and I was, basically the keeper of it. If you have that kind of, mindset towards it, well, then the banking system doesn't scare you as much. Like, you're not so worried about the idea of being enslaved by this fiat currency or something. But yeah, it's not it's not well understood. And even though I babble on all day about it, it's like, my coworkers and all kinds of stuff, like I explained the yield curve to one of the other guys that I work with. He's older than I am. I mean, he's, I don't know, in his 60s, I think. And he didn't understand what the yield curve was. He asked me about it. He was just like, what do they mean by the yield curve? And so I explained it to him. And after I explained it to him, he's like, oh, well, that makes a lot of sense now. And if you're not familiar with the yield curve, I guess I'll explain it to you real quick. So the yield curve is real simple to understand. Generally, they're talking about the U.S. Treasuries, and they're talking about the duration, the maturity of those Treasuries. So you have them from like 1 month all the way out to 30 years. And generally, just like any other loan that you take out there, if it's a 15-year mortgage, you're going to pay a lesser of an interest rate than if you take out a 30-year mortgage. Well, the treasuries are generally the same way, that if you have a 1-month treasury, it's going to have a yield that's a lot less than, say, a 10-year treasury would. And so if you look at it on a graph, you have like the short term, the 1 month being a short or a lesser yield, and as you go out farther on the duration of the maturities, then the interest rates begin to rise on the yields. And that's the yield curve that they're referring to. When they talk about an inverted yield curve, they're talking about the short-term treasuries having a higher yield than the longer term, and that's an inversion of the yield curve. That's not typical. That's showing that the markets are very nervous about the short term. They don't want to tie their money up, and if they do tie their money up, they're demanding a higher rate for it. At the 10-year mark, they're not so nervous about it, but they are definitely nervous about the short term. And so this inversion of the yield curve, that creates like like the opposite direction that it normally would go. Normally it would be like short term, low yields, long term, higher yields, and that's the yield curve. So after I explained that to him, he's like, wow, that makes a lot of sense. And it just dawned on me. It's just like, well, it didn't dawn on me, but it gets me thinking. It was just like, man, nobody understands how any of this stuff works. And so when people are talking about the Federal Reserve and the lifting of interest rates, like they asked me, it was just like, so how long does it take before, the interest rates start to rise on a car loan or a house loan or something like that? And I'm like, well, it doesn't quite work like that. The Federal Reserve will lift interest rates, but it doesn't necessarily mean you got a timeline in which that the car loans and the house loans will go up. That's really based more off of like the mortgage-backed securities and how much demand for those are and how prevalent they are within the markets. And then at that point, they're just like completely lost. They're like, can't you just tell me what the interest rates are going to be and how long it's going to take to get there? And it's like, no, I can't, because it doesn't work like that. Anyway, let's move on. Boy, lots of you guys up in here. I love it. All right. Yeah, the bullwhip effect. I learned about this from you. Yeah, and I learned it from you guys, from the viewers out there. I mean, like I said, I was talking about some of the things that I was experiencing, and it was in the comments section. I wish I knew the person who had commented that, because I have to thank him quite a bit. I mean, after they just mentioned it, they just said this is the bullwhip effect. And I didn't even know what that was. I went and looked it up, and I'm like, yes, this is exactly what I'm experiencing. And so I started talking a lot about that bullwhip effect. And then after it started presenting itself and people saw all these inventory levels rising, that's when you saw like people like Michael Burry coming out saying this is the bullwhip effect. And then everybody else wanted to say, hey, look, Michael Burry's talking about the bullwhip effect. And it was like the uneducated economist was talking about it a year ahead ago. All right. 2 ways money is created: government spending and bank loans. Yeah, that's right. Let's see here. Uneducated economist, what do you think will happen with real estate in the short to mid-term? To be honest with you, I think we're probably going to experience more of what we are seeing right now, where you're going to see inventory levels rising. You're going to see the housing sit on the markets for a longer time than what people are experiencing. But as far as dramatic price drops, I don't think that's going to happen. Like, I could see where there would be what would appear to be a significant price drop, but what we're probably going to see is somebody, okay, let's think about it like this. Like, I bought a house and it goes up like 20% over in the course of like less than a year, right? I mean, it was a dramatic increase. So now I can take off like 10% or even 20% off the cost of this, or off the price tag of this house, and still be at what I paid for it. And I still wouldn't be underwater right now because I had to put a huge down payment on it. So the chances of like a house coming down way below, like, let me see how I can explain this. Prices have moved up so significantly that I can see the significance coming out, right? But a huge drop after that, I don't think that's going to happen. A lot of people over the last year have purchased have purchased a lot of homes with cash. They don't care where interest rates go, and they didn't care about what the price was enough to say that I want a better price on this. They were willing to give up that cash for it. A lot of times the price of the house can be quite expensive, but if you're making payments on it, you really don't care what the price tag is. You see what I'm saying? So long as you can make the payments. When you're paying cash, you care what the bottom line is, and people were willing to pay cash at these higher prices. So that kind of locks in those prices at a higher level, especially when the replacement cost of a house is still elevated. What can change that is if people start going into mass unemployment, like if there is a lot of layoffs to the point that people will no longer have their jobs and they cannot make their payments, and you start seeing defaults and foreclosures. That would change the scenario, but I don't see that happening coming into the near to midterm. That could change. Like, we could see, those conditions change quite dramatically. But at this point, I just don't see where house prices are going to drop dramatically. I mean, like I said, a lot of the hotness could come out, but as far as a dramatic cooling, I don't think that's going to happen. Thank you, Bashar, for the $4.99. What would you say is a safe to open business if it doesn't require much inventory, such as ice cream shop or repair service? In my area, I think it would be handyman. I mean, I kid you not, just somebody who can do handyman maintenance kind of stuff on a house. It seems every day that I have people in my area, because what's end up happening is, like, this used to be like a fairly working class kind of town, but a lot of gentrification has happened here. A lot of retirement and then also remote workers have moved to this area. I mean, it's safe, it's clean, it's pretty, it's a nice place to be. So I can see where a lot of people would want to live here. The problem with it is that it's forced out a lot of the working class people. Like, they're just hard, there's not nearly as many people doing like construction work. Well, I mean, there's a lot of people, don't get me wrong, but like having contractors' names of people who are available, there's just not a lot of people out there who are available to do contracting work. I mean, they're like a year or longer out. So people who are looking to have something simple done, they're like, I just need a door hinge replaced or something, or like even something simple like changing the batteries in a smoke detector. I have like a lot of retired folks who come to me who simply can't get these things done. Like, they're physically unable to do it. And like one couple with the smoke detector, they were just scared to even get up on the step stool, up on the ladder to change this thing. I mean, like, if they fell, they would be in, serious pain and injury, and who knows what could happen from it. So they're not even willing to take the chance to step up on a ladder to try and replace this battery, but they are willing to pay somebody to do it. And so something simple like that, I think, would actually do fairly well in my area, just doing like handyman kind of service, property maintenance kind of thing. All right. Thank you. What is that? DC for the $5. Really appreciate that. Do you feel the Fed is trying to finely tune the rates higher than lowering them? Will they go higher or lower? Well, I don't think the Fed really cares really like what the interest rates are. I think what they are more concerned about is the demand for their liabilities. That's what I think is really like the major concern. See, here in the United States, I mean, you could ask 1 out of 100 people, or I mean, ask 100 people, there's not one person who would say that deflation is their concern. Like, I mean, everybody is concerned about inflation. It's like the common narrative out there. And it's hard for the United States to understand what it is to have a strong dollar. But outside of the United States, everybody understands the strong dollar. Like, everybody knows what it feels like to have a dollar strengthening and what happens to them because of it. And that's really where I think the Federal Reserve is more concerned. It's like how much demand for their liabilities are out there. See, they know about like they understand like how much demand for treasuries. They understand how much demand there is for maybe some other sovereign debt. What they don't necessarily know is what's going on in the shadow system, right? Much like the shadow banking system, and it's not like shady banking system, it's the shadow banking system. You got like the Federal Reserve System, and then you got private equity, or not necessarily private equity, but private money, right? The private banking system. And this is really confusing for a lot of people, but like it's one of the reasons why we saw the great financial crisis here in the United States is that there was these private mortgage lenders out there. People were issuing out mortgages and then packaging those things up into these mortgage-backed securities and selling them off. The criteria to get a loan that went into those mortgage-backed securities was very low. So people were like giving loans out to people like who just simply just couldn't afford them. Right? They didn't even have any like job verifications or anything like that. And so the loans ended up being toxic. And that's what ended up going into these mortgage-backed securities. Well, it was the shadow banking system that created that. And it wasn't necessarily under the observation of the Federal Reserve. Like they didn't even know exactly what was happening there until it was too late. Well, that very same scenario could be happening on a grand scale on the globe, right? Where there is a lot of loans that have been issued out in dollars. They're due in US dollars, but they have nothing to do with our government. They have nothing to do with the United States corporations or anything to do with the United States at all in any kind of manner, except that the debt is due in dollars. And now we could come into a situation in which the liquidity starts drying up and those debts, all those debts that were issued around the world in US dollars start coming due, and the demand for dollars start really increasing much higher. The Federal Reserve has no idea how big that demand really is or how much they really need to have out there in order to fulfill that demand. And that's really where demand for their liabilities, I think, is their biggest issue. Because if the demand for their liabilities really starts running up, well, they're going to have to go into some massive quantitative easing. And if it's on a grand global scale, who knows how much quantitative easing they would really have to go into in order to fulfill the demand for how much dollars there is out there. I mean, that could be a very serious situation. So I don't think they really care about where the interest rates are. I think the bigger concern is how much demand for their liabilities is. Thank you very much, Bashar, for the $1.99. I'm asking due to the oversupply of inventory. What was that original question? I'm sorry, let me go back to that. Where was that a question that you had? Did it already disappear or something? I guess I missed it. I'm sorry, Bashar. Oh, was that it? No? Oh, there it is. Yeah, okay. Well, would you say it's safe to open business if it doesn't require much money? Oh, I see. And then the follow-up question was, I'm asking due to the oversupply of inventory. Oh, I see. Like what kind of safe business would be for the oversupply of inventory? Um, I don't know. I mean, I guess if you were like a liquidator, like if you could go and buy up all that excess inventory for super cheap and then flip it or something like that, but I don't know if I don't know if I would really be like into setting up a retail outlet at this time. I think probably a better business to be into would be like, I don't know, repossessing cars or something like that. I think that's probably going to be a better business to be in. And it'll be, it wouldn't be like a long-term business, but I can definitely see where you'd have like, a nice boost for a short time. Boost to business anyway. Let's see, where else are we at here? Boomers are renting and dying at a higher rate. Or retiring and dying at a higher rate. Yeah, I can see. Grow mushrooms, money, printer, go burr. All right, but we have had a lot of water this year, so that helps. What was it? All right, land, tractors, honest women. The ability to protect it has lost its attraction to the new crowds. Yeah, that's true. No kidding. My TW30 service manual is not for winners. Or not for weenies. Boy, I can't. There's glare on this phone. I need to get like a sun shield for my phone. Um, the textbook definition of inflation is as follows. Inflation is the changing price of an object over time due to time value of money. Yeah, to me, it's the expansion of money and credit, but I guess in the end, that's the same. One like for the channel. Well, I appreciate that, man. Thank you. Because we have turned this ranch into a hunting ranch, I don't have to plant as much as we used to. Interesting. Um, Fed will raise rates until they can't anymore. Let's see here. Go Army, beat Navy. I'm worried about the flood of homes with boomers dying. Yeah, again, that's kind of like, I mean, I could think that too, right? With the boomers retiring. But I also have to think, like, how many people are living with their parents still, right? And then that house end up just getting left to the children who are still there. That's what I wonder, is just like, how many retired boomers have their adult children still living with them? I think that would be like a question to ask about whether or not the dying off of the baby boomer generation is going to increase the housing inventory. I think that would be the other question, like how big is that ratio of adult children or children living with their retired parents. Yeah. All right. There is money in reishi. Oh, in the mushrooms. We have looked into it, and the business model was 7 years before return and 10 million investment to start. Eat gads. All right. Single-family homes will stay in demand for a long time. Is a stronger dollar good or bad for fintech companies? I'm going to guess it's probably bad. And I'm not thinking for any other reason other than I think a lot of these fintech companies are over indebted. And a stronger dollar is going to make it harder to pay off your debts. It's also going to make it harder to do your sales, like especially when it comes to doing sales outside of the United States. So I'm guessing that is probably bad. Okay, I'm still living with my parents. Jesus, I hear you, but I'm retiring boomer and I'm about to get really busy growing my own food. If sitting on the couch watching Dancing with the Stars, eating pork rinds, and waiting to die, not me. Well, good for you, man, because that ends up happening with a lot of people. I mean, I knew people who retired during the pandemic, and I mean, I was talking to this one couple, like it was shortly after the lockdowns, after they started opening up again and allowing people to go out there and travel around and stuff. This couple, they came out, and I kid you not, they said that they didn't leave their house for an entire year. And I thought to myself, I'm like, holy moly, I heard other people saying this too, but they were actually standing, they were like, this is the first time we have been out of our house an entire year talking to people. And I'm thinking, holy moly, I don't even know what that would feel like. But they weren't the only ones, and like there were some other people who I had talked to who had retired during the pandemic just because of the situation, and they don't look so good now. Like they've been sitting around the entire time and not really doing anything, and I'm thinking, man, that retirement was not good for you. And sitting around watching TV and eating pork rinds, that I can't imagine that would be for a very long retirement life. Do not go gentle into the good night. I am hated into my house by our system, centered everywhere but here. Huh. We have access deer on our hunting ranch. Right on. Aren't those the little guys, those little deers? How volatile could land prices be a speculative housing market in the U.S.? Yeah, that's one thing. Like, buying bare land, that's something that I've always considered to be like a fairly decent investment. Not because of like the potential of what you could do with it, but just because land, like a lot of other stuff out there, is limited. Like there's only so much of it available, and if you can get it in a good location, then I can't imagine it being like something that would go down in value over a longer term. It would just, like, especially if you have it in a good location. So I like bare land idea. Hey, thank you very much. What is that, Levi Axe? For the $2 Canadian. Really appreciate that. What's the greatest life advice you'd pass on? Um, have a worthy goal. Have a worthy goal in your life and pursue it. Um, that's the only, I mean, and it's hard to say like what that worthy goal is going to be. Like for me, I just really felt like my life was never really going anywhere. I wasn't doing anything. I felt very stagnant. Um, Felt like I was failing in a lot of ways. Uh, and I know a lot of that had to do with the alcohol because I was drinking a lot during that time. And once I had given up the alcohol, like that was my first goal, was to quit drinking, right? So I quit drinking. And when you quit drinking, then you realize, well, since I'm not spending my money on drinking, then what do I spend the money on? So I started paying off debts, right? So I paid off my debts. And once all the debts were paid off, then all of a sudden there's like this huge weight off my shoulders, and I started looking at the world a lot differently. I don't think people quite realize how stressful your life is. Even if you can manage your debts, just having debts in itself, even if you can manage them, even if they're like, you can totally make the payments, having that weight on you it weighs heavy on you. And once that's gone, you don't look at the world the same way. Like, a lot of stress is relieved from it. So if there was any bit of life advice, I would say it was to have worthy goals. Like, to have worthy goals and pursue them. And, for me, it was like quitting drinking, getting out of debt, and then, started pursuing like this channel and stuff. And like, my goal to have a successful YouTube channel. Well, successful YouTube channel, I didn't really know what that even was. Like, was a successful YouTube channel 1,000 subscribers, being able to make money at it? I mean, my whole goal for the channel, like literally, like as far as monetizing the channel, my whole goal was to make $100. That's it. I just wanted Google to send me one check. And that was it. That was like, after that, I didn't really have a goal for making money on the channel. That was my goal. And as far as the YouTube channel goes, I just wanted to have like a successful YouTube channel that I could, talk economics. I never thought that I would ever get to 100,000 subscribers. Like that was not even, like that was not in my vision. Even getting 100 subscribers was a surprise to me. And when I got to 1,000, I was thinking, man, this is really something. This is amazing. And, and I just kept going with it. I didn't really have like a goal of like, doing anything else with it. It just kind of got to this point. So now my goal is like, okay, so what do I do? Like, I want to advance the channel, but what is it that I'm supposed to do? So I'm thinking speaking engagements, write a book. I mean, there's got to be something else out there. And so that's where I need to find my goal. I need to expand my goal a little bit further. All right, let's move on. All right. Levi Axe had 10,000 credit card bill when paid instant relief. Yeah, see, now I had close to, well, shoot, I mean, between the medical debt and the credit card debt, I had like 20 grand worth of debt. And I tell you, when you're broke and you don't really make a lot of money and you don't really have any way of like, paying those debts off, it doesn't matter if it's $10,000 or $110,000. It just feels so overwhelming. Like you're just never going to be able to finish this or get out from underneath it. It's just something you'll have with you for the rest of your life. And then one day it's gone. And man, it's like there's very few feelings that I've ever had that made me feel as good as being out of debt did. I mean, it is quite the experience, especially if it's something that you didn't think you would ever be out of, Tyler B, hello, UE. Well, hello, Tyler. All right. Loan deferral. Okay, what is the average amount of time historically from bond inversion to recession? Gosh, I don't know. Isn't it usually like 6 months or something like that? I don't know what the exact timeline is for it, and it's not exactly a guaranteed recession indicator. It's a very good recession indicator, but it's not like a guarantee that it's going to happen. Um, it was kind of funny because like that's when it was the Alan Greenspan interview, and you guys heard me talk about this one before, but it was really that Alan Greenspan interview when the lady was asking him what he thought about the 2-year, 10-year inversion and being the recession indicator. And although he said it straight up. He was just like, that is a very good recession indicator. What he follows is the 5-year, 30-year. And he said when he sees the spread start to widen between the 5-year and the 30-year, so that when you see that spread start to grow, he said that's corporate management's willingness to invest. That's what his description of that was. So I think about that on the reverse of it. If you see the 5-year, 30-year spread shrinking, or even invert, like which we have seen, that would be corporate management's non-willingness to invest. Right? And that's really where I saw come first before the 2-year, 10-year inversion happened. I was doing videos talking about the 5-year, 30-year inversion and how this being Alan Greenspan's kind of indicator. Well, it wasn't but, a few weeks later that we saw the 2-year, 10-year invert, and then everybody starts talking about the recession indicator. So I'm not following the 2-year, 10-year nearly as close as I'm following that 5-year, 30-year. And that's what I'm looking for, that spread to grow between the two. And once you start seeing that significantly rise, that spread between the 5-year and 30-year, I think that's going to be my indicator to start investing back into the stock market again. Because like that's corporate management's willingness to invest. So anyway, that's what I'm following. All right. Being debt free is freedom. It absolutely is. I mean, it was so freeing to the point that I was willing, like I said, I was willing to rent for the rest of my life just so I would never take on another debt again, because I wanted to be 100% assets and zero liabilities. And I know people always argue with me on this one, saying, but your payments are going to a house that you can eventually sell, and you assets, all that. Okay, all that stuff, whatever. Assets and liabilities. At the end of the day, at the end of 30 days, if I don't make my rent payment, I'm out of the house, right? I don't get to live there. But they don't come and take everything from you. You don't lose your entire life. You don't go into 10 years of struggle because you had a foreclosure on your house, right? If you have 100% assets and zero liabilities, there's very little damage that can actually happen to you. Sure, you're not going to do as well, possibly, by buying a house as opposed to renting. Like, you can buy a house and then have an asset by the time you're done paying for it. But when you're renting, you're not taking on that 30-year liability. It's actually an asset. You're buying freedom from that. And that's the way I looked at it. But unfortunately, when my house that I was renting went up for sale, I could not find any place to rent in Astoria. I mean, you guys know this. You watched me go through the struggle of that. And so I was pretty much forced to buy a house. Now, I wasn't real happy about it at the time, but now that it's, 6, 7, 8 months later, I'm actually feeling pretty good about the purchase because I'm really enjoying the environment that I'm in. Like, the house that I rented was a really nice house. It was big and it was close to town and all that other stuff. But where I live now is so peaceful, and it has this big yard, and the family's really happy about it. So although it's a struggle with the idea that I'm in this 30-year liability on this house, it's worth it to me because the family's so much happier for it. So anyway, moving on. I learned that hard debt was with child support errors. Oh yeah, paid off, never want to be in debt. Yeah, debt is so like it's I don't even know how to quite describe it. I mean, it's just like it deteriorates your mental health. It really does. I hope they hold the student debtors to the fire and not let them off the hook. I don't think they can. I just don't think they can let them off the hook. I mean, I saw this big banner the other day that said, they relieved like $1 billion worth of student loan debt or some number or whatever. And I'm looking, I was like, isn't there like 1 point something trillion dollars of outstanding student loan debt out there? I'm like, what is this $1 billion worth of relief? That's less than even a percent of all the student loan debt out there. It was like spitting in the sea. It didn't do anything, you know? And I just don't see how it is that they can even do it. Like the government has these student loan asset-backed securities. That's really what the government has. The student loans have been put into a security, much like a mortgage-backed security, and the government has these slabs on their balance sheet. Right? So if you take the government's balance sheet with assets and liabilities, right, the asset portion of their balance sheet has financials on it, right? And of that financial portion, student loan asset-backed securities makes up like 50% of that. So it's a huge portion of their balance sheet. And if they were to go and just like wipe out these, like the trillion, whatever, I don't even know how much is on their balance sheet, but they were able to just wipe out all these student loans right off their balance sheet and just say, okay, that's it, they're gone, right? We don't have those assets on their balance sheet anymore. Now their liabilities are much higher than their assets, and the credit rating would go to shit, and interest rates would like fly through the roof. The government can't possibly just wipe out these student loan asset-backed securities. They just can't do it. They either have to charge, like, you either have to like tax the people and like relieve it that way by like actually buying them out, or there has to be like, you know, a private company or private money coming in and buying those student loan asset-backed securities off the balance sheet. But to just like make them disappear, that isn't going to happen. Like, it can't happen that way. Right? So they could come up with another scheme, but it isn't going to be just like gone, right? That it won't happen. All right. What's up with the numbers? What's that for? I would guess that when they declare recession, credit dries up. Okay, my first house, 3-bedroom, brick, 8 years old, was 80,000 Australian. In 2000, we came a long way, baby. Yeah. All right. Do you think that restarting of student loan repayments or the ridiculous auto loan issued over the last 2 years are the bigger issues in the short term? I wouldn't say bigger issues. I mean, it might be for some people here in the United States, but as far as like an economic impact of that, I think the bigger issue would be the sovereign and corporate debt crisis that we're going to experience from the globe. That's really where I think the pain is going to be felt. But we'll have issues here in the United States from it, but I don't think that's going to be nearly as big of an issue as the corporate and sovereign debt crisis will be. They could allow bankruptcies on student loans at least. Well, okay, let's take that into consideration. What happens when they go through this bankruptcy? If they allow people to just, you know, default on that loan and go bankrupt on it, what happens to all the assets on the government's balance sheet? Do they get reimbursed? Might get pennies on the dollars for it, right? So again, assets, liabilities, all of a sudden their assets fall off, their liabilities are much higher, and they won't be able to, well, I shouldn't say they won't be able to. Their credit rating diminishes, and then it makes it that much more difficult to borrow money, and the interest rates go up and stuff like that. So even allowing students to just like go bankrupt and just declare, you know, default on the loan, I think, again, that would not, I just don't see how that's going to pan out very well. It's like, I mean, the consequences that come from that would be very extreme. I learned about you when lumberjack landlord Matt did an interview with you. I am glad you're on the property ladder. Keep doing what you are doing. Yeah, well, I have to thank Matt. You know, it was the conversations that I had with Matt that really kind of at least gave me the ability to start looking at real estate without so much like negative thoughts towards it. You know, he's done quite well with his properties. He's, you know, was very much like, you know, like me, like, you know, got out of school. It's not like we went to college and got degrees and, you know, did whatever. We were just working class people. And so he's very inspirational. Like, I mean, if I remember right, he says he owns like over 150 properties or something like that. I mean, definitely one of the success stories that you wanna either mimic or at least admire, and for what he has done. So I do have to thank Matt. He's really given me a much better like idea of what I should be looking at as when it comes to comes to real estate. So I thank Matt a lot. He's a great guy. Hey Paul, thanks for the $25. 25 for 250 like goal. Hey, right on, man. Thank you so much. I appreciate it. All right. Let's see here. Yeah, Paul is pretty cool for that. Thank you, man. Student loan crisis is just like the 2008 mortgage crisis. Um, I don't think so. I don't know if it's necessarily like the same, because like if you fail to make your house payment, you get kicked out of your house. I mean, if you fail to make a student payment, I mean, well, I guess they can garnish your wages or do something like that. But like, what do they come and take from you? I mean, if you don't really have anything anyway, then what is it they're gonna like? They guess they can ruin your credit, but like, what are they gonna do? You default on your house, and then you're out of your house. Come to Silver Expo in Spokane, dude. Oh wow, man, that sounds like fun. Yeah, who was that? Doesn't like Dave Morgan put that one on? Didn't doesn't Travis like wasn't Travis the economic ninja? Wasn't he at the last one too? Honestly, the Fed government needs to stop guaranteeing student loan debt to the colleges. I totally agree with that. I absolutely agree with that. Like, I don't even know why in the world that the government was involved with that, other than to create the debt. Like, I mean, they did get a lot of people right after the great financial crisis to borrow money to go to college. So, I mean, I guess if the whole idea was to, like, the government was the borrower of last resort, right? Essentially, like, the government was borrowing all this money and went into like these shovel-ready jobs. You remember that and all this stuff. But if you can't get the people to borrow money to go and spend it into the economy, well, then I guess you could get them to borrow money to go to school, and then force them to pay it. I don't know. But you're right. I don't think the government should be involved in that at all. In fact, I think the government should get out of just about everything. Travis will be there. Yeah, I kind of figured he would be there. Travis is a good guy. Let's see. I use my mowers at 1,000, even though they are 580. Keeps things interesting. I don't understand that one. Good night, all. Gotta go water my flowers. Alrighty, Brian. Enjoy your evening. Big Hills. Spend as much as you need. Bought a Saturn View for $400. $600 later is a trooper. Huh. All right, people can't afford student loan payment when their wages isn't even a living wage. Well, then what was the point of going to college? What was the point of getting the student loan? Like, I didn't understand this. I mean, I remember, like, I don't know, was it 2010 or whatever, and they had that education connection. Remember those commercials? Like, I don't have TV anymore, so I don't know, maybe they still have these things, but they had this education connection, and I remember they had like this young girl like dancing about like how it is that you can go to school and get the student loans, and it was all about like how it is that you can get these damn student loans so you can go and get a degree. And like everybody was doing it. It was like that's what you had to do or something. And I would get up and dance, and I would sing the song for my wife and stuff, and I'm like, come on, don't you want to go get a student loan too like everybody else does? And who knew that it was going to be a crisis later, right? It's just like I didn't understand it. I couldn't understand why they were doing it then. And they're like, well, you make all this much more money if you have a degree. And I'm like, how did you get it? I don't have a job. And I mean, you're sitting in a sea of degrees with other people. Like, how the hell are you going to stand out? Like, the one person who has experience, who didn't go to college, who actually went to work and then has the experience of it, they go to apply for a job against the people who have a sea of degrees. Well, then they stand out, right? All of a sudden, the sea of degrees doesn't mean anything when you have one person who actually has experience. All right. Yes, the government should get out of just about everything. Yep. You'll lose so much more depreciation to avoid the cost of repairs. Oh, with a house and cars and everything else? Yeah, I can see that. Trump's the best, worst things he's done, not pardon Assange or Snowden. Yeah. I want a pony, just putting it out there. Yeah, who doesn't want a pony? Alright. College is overrated. Yeah, I believe that. I haven't had a TV for 12 years. Good for you, man. I haven't, I mean, well, I've had TV and cable in recent, like within the last few years, but I don't like right now. I have a TV, but we don't have cable. We don't have internet access at the house right now because the internet access sucks, and I'm waiting for Starlink to become available for us. Um, I have like no desire to watch TV, like absolutely none. And even like watching a movie has become difficult for me because it's like to spend 2 hours to watch a movie is like to me is almost like a waste of time. So I like going out to the movies because then it feels like I'm actually like doing something, like going out and having it. But sitting at home and watching a movie just drives me nuts. I can sit there for maybe a half an hour, and then I'm starting to lose it. I got to get up and start doing something, or start working on a video or doing whatever. But like sitting around watching TV is like not even remotely desirable to me. Dude, that commercial was so annoying, bro. Which one are you talking about? You talking about the one I did? What do you guys think about that? I had another offer to do another, take another sponsorship, but I don't know, man. I just felt so. I didn't feel like I was a sellout or anything like that, but it just didn't feel quite like it was me for the channel, and I mean, it was worth it. It was a lot of money, but I mean, I do have to wonder. It was just like, is that something I should be doing? That's why they associate unicorns with rainbows. All right. Doesn't matter what degree you have, unless you have connections. It is Russian roulette with AI recruiting software. Yeah, right? I mean, I can totally agree with that. No, the 1800 connection commercial. Oh, yeah. 1-800 connection. Yeah, that's right. Didn't even know you did a commercial. Yeah, I guess I kind of forgot about it. Yeah, I did a commercial a couple weeks back. Sponsorships are fine, but it depends on the sponsor. If it doesn't feel right, it's not right. Yeah, and that's the thing. Like I mean, I felt okay with the company that I had done the sponsorship with. Like I mean, I was okay with that. I mean, I'm not into like investments or even like recommending investments or doing investment advice or anything like that. But the company, after I looked into it, I mean, it seemed like like an okay company, so I didn't have a problem with it. Other ones that I've seen out there, like I don't know anything about them, and I'm not really big into like promoting stuff that I don't know anything about. I mean, at least the company that I was promoting was gold mining and stuff. So tattoo shops, porta potty dealer, fishing charters, good sponsors. Money, anything? No. Yeah, if I could find fishing charters around here, I would go for that kind of sponsorship. All right. It showed that you did not feel comfortable doing the commercial. Did you guys pick that up in the video? I mean, right. The same people who made Yui's car set also did the moon landing. This is not a set. This is my actual car. This is what I drive. Hello, Yui. It's a beautiful day in Australia today. Well, that is awesome. Where is the commercial? I don't know. It's back there a little ways. You can find it. You just go and look at the thumbnails, and you'll see a big banner right in the thumbnail. I don't do that on my thumbnails, so that would be pretty easy to find. All right. And I'm not really into promoting that thing right now, so. All right. It's half a car. I'm convinced. No, it's a full car. I drive it. Just bought a spade shovel, Lowe's, last style on the shelf. My receipt said min retail price applied to this item. Huh, what does that mean? Everybody hit the thumbs up button. Yes, please do so. We got 433 of you up in here, 280 likes. Hit that like button. Let's see if we can get it up to 300. Shouldn't take too much. Anyone willing to work and own nothing, apply within. All right, Stanley Kubrick designed the car set. Love that you support your sons. The oldest has a great start to a channel. Keep up the good work. Advice, been watching for years. Appreciate you, man. Um, Thank you. And that's cool because Mac, he started that channel and did everything. Like, I didn't say anything about it. I'm like, dude, if you want to post videos, that's cool with me. Just, I just told him a couple of things I didn't want him to talk about, like, where we lived and stuff. But, I was just like, go for it, man. Let your creativity go. And he has, and he loves that channel. He's doing quite well at it. And he's built, other than the shout out that he did for the 100,000 subscriber video that we did, he's built that entire subscriber base on his own. I mean, that was all him and his efforts. So yeah, I'm pretty proud of him. He's going for it. All right, I need to mow my lawn too. All right, I just saw somebody said they needed to mow their lawn. All right, so glad my house and car are paid off. I'm about to turn 39 and never felt better and more powerful in my life. Yeah. Yeah, when I paid that, before I bought the house, but when I paid that debt off, man, I felt the same way. Like, I had never felt so free and happy, and like everything, like, everything started looking better, everything started smelling better, everything started tasting better, everything was better. It was like everything was so much better when I got out of debt, and it just felt so good. Working to own nothing is called volunteering. Hey, thank you very much. Student loan chit chat, $2. Is that your real name? No, obviously not your real name, but your real YouTube name. That's funny. Government subsidizing rent only increased rent prices. Yeah. Yeah. Well, actually, yeah, I could see that. I mean, if you are a homeowner or at least, a property owner who is renting out that property, and you just went through what we just experienced with all the people going through the moratoriums on rent and stuff like that. I mean, I would be super nervous about having a rental property out there. And I would definitely have increased the rent, considering everything that has happened over the last year and all the costs and added costs that go into property maintenance and stuff. I mean, it's not a surprise at all. How much, what time is, let's see, I got 41%. What time is it right now? It is 6:30. Okay. We'll give it a little bit more time here. All right. One thing I don't have is a career or something I like to do, though. I paid off my house and car while working dead-end jobs. Well, dang, man. Well, shit, if you were able to do that by the time you were, what, 39? Is that what you said you were? Isn't that? By the time you were 30, man, that's killer with a dead-end job. Sounds like you're pretty resourceful, man. I don't know. I mean, I think you got things going on. I don't think you're letting on as well, saying that, dead-end job. I think you got more going on than you say. Just personally, I mean. Let's see. I paid your student loan. I paid my way flipping tacos at Taco Bell. Don't feel like an idiot now. Just paid off my condo this week. Picked up a second job to do it, part-time, and purchased half of what I could afford. So freeing. Yeah. Our kids are going to have it so much better than us. We will return to sound money one day, and it'll be amazing for them. I think a transition to a sound money system would be quite, I don't know. I mean, I guess it could be fairly easy to transition over if you were to do something like, say, have treasury bonds partially backed by gold and then kind of reintroduce it that way. But going like, say, we're going to end a fiat system and go right into a hard money system, or go into like a gold standard or something, I think that would be very devastating to a lot of people, mainly everybody who is counting on a retirement from somebody else's promise to pay. Because if you get rid of fiat currency and you go to a sound money system, then there's not going to be the ever increasing amounts of debt that keep this system going the way it does. There's a lot of people who are going to suffer the consequences from something like that. But in the end, at the end of the when that's all done, all the the clearing out of all that bad debt, then what the results that come from that would be a fairly good one. I mean, we would have a stable economy where you wouldn't have like all this crazy wild swings with inflation and stuff. But the gold standard didn't exactly produce a system in which that people were protected from the business cycle, because that still would take place. I mean, there's still going to be booms and bust cycles to it. It's just that they're going to happen a lot quicker and easier for people to deal with. It wouldn't be long and drawn out and be so devastating. At least not in my opinion, it wouldn't be. But you would definitely still have the business cycles taking place. Gold is not affected by EMP. Yeah, seeing prices go up here in the Midwest for houses. I had some help from Bitcoin, but not a whole lot. I made 2 sales 2 years in a row, the last 2 Februaries. Economic Ninja. Do you believe in real estate crash? Oh, the real estate crash 12 months from now? No. I don't. I mean, I don't know. What's a crash? Like, I mean, if you see 20% come out of the housing market prices, like, you see like 20% drop, is that a crash or is that a return to reality? I mean, like, the massive increase to the price of homes over the last few years is so unrealistic. Like, it should never have happened that much. So taking a lot of the pricing out of the housing market right now, I don't consider that a crash. I consider it a return to reality. I know reality scares a lot of people, but it's what it is. I mean, it's coming back to earth, and that's really what I think is going to happen. People might call that a crash because, I mean, if you start right now from these elevated prices and then you have a dramatic drop, then yeah, you could say that, there's been a crash to the housing prices. But really, if you just kind of consider it a return to normal, I don't think that would be considered a crash, not in my opinion. Although for some people it might feel that way. There are no more goals. No, there are definitely goals. All right. Biden's economic knowledge is underrated. Yeah, I wouldn't know because I don't know if I have ever listened to anything that Biden has ever said. Not one thing, ever. Like, as soon as his voice comes on, like, whatever it is, I just turn it off or just quit listening. I do not listen to that dude. All right. What are modern life goals? Well, I don't know. Like, I mean, it seemed like back in the day, like, as far as a young man goes, you would think, like, you'd have like a decent job or a career or maybe start a business, try and find, decent partner in life, raise a family, kind of things like that was always the goal. But it doesn't seem that that's like a worthy goal or ambition amongst young people anymore. I don't know what that goal would be for people. It might be starting a business. It might be traveling. It might be just, I don't know, like, doing artwork. I mean, who knows what the goal would be? It doesn't really matter what the goal is, so long as it's worthy. Like, that's the important part. Like, if your goal is to see how high you can get every day, that's not a worthy goal, like, that's like a worthless goal. But if you have a worthy goal, something that says, I want to make the world a better place somehow, then, just find what it is. I mean, find what your passion is and how it is that you can, treat the world better for it. I'm a home inspector. People were skipping inspections last 2 years. Now they don't have money to fix anything. Yeah, it's kind of funny because I did my own home inspection. I already knew everything that was wrong with the home because I work on homes. I did at one time anyway, and I do building supplies. So I kind of went around the house and I already did the inspection, but I had the home inspected. I paid for an inspection on the home, um, because I wanted something documented so I could use it for my advantage. But yeah, most people I heard of, they passed up those home inspections and then got nailed, like they didn't realize how bad the home was. Goals used to house and kids. Goals used to house and kids. Job losses are starting to pick up, and that leads to the crash. Yes, now I totally agree with that. Like once people start losing their jobs, then then the foreclosures and the defaults, that's what starts to kick up. That's really what we're looking for. But right now, we still have a fairly tight labor market, and with so many job openings out there, even if you were to lose your job or the layoffs were to kick in, there's still a lot of jobs that need to be filled. So we got some time before we actually start seeing the effects to the housing market because of the layoffs. So it can happen, but it's not quite yet, It is the goal for many still, yeah. Peace and blessings to my brother. May God bless you always. May God bless you richly with everything you need always. Much love, blessings always. Well, thank you, Sheila. That was quite a nice comment. Back in our days, we used to have special cassette tape cartridges called head cleaners. Try explaining that to your adolescent nephew today. Yeah. I tried to explain to my kids that phones used to be attached to walls, right? And that just like blew his mind. Like, it was just like you couldn't just take a phone anywhere you wanted. It was just like, no, we didn't have phones to take around. Like, that for my 7-year-old is just so hard for him to understand and wrap his head around that, that you would like go outside and then not have any kind of communication. Like you just had to, to be able to call anybody you want or just look something up. Like to him, that is so far off of a concept. And it's kind of comical to watch, like my wife and I, we kind of joke around and, talk about that, as far as like the kids having no understanding of what it's like to not have a cell phone. Hey, thanks, John, for the $1.99. Really appreciate that. Will 2023 be a wash and rebound in 2024? I don't think we're gonna have, like, what is the rebound? Is a rebound something like what we have experienced in the stock market over the last few years? Would that be like a rebound? I don't think something like that's going to happen. I think what we're going to end up doing is plateauing out for a very long time. Well, we might have some increase, or maybe, but I just don't think it's going to be something dramatically like crazy increase to the stock market or housing market like we have experienced over the last few years. I think that we are going to see a slowdown in the growth of like everything out there for quite a few years. Like I don't think it's going to be coming back and like people are going to be like screaming how awesome everything is for a long time, like years and years. All right. Ever read Unused Resources and Economic Waste by David Rockefeller? I have not. In fact, I have never really read any books on economics at all, except for The Creature from Jekyll Island and Cantion's essay on economic theory. Those were pretty much the only two like actual lengthy text readings that I've ever done. I think inflation stays high for a couple of years. I don't. I think inflation is going to start coming down. Like I think we're going to start experiencing a lot more disinflation, where the inflation doesn't continue to go up like it has. It comes down, but it's still elevated. Like, we just experienced, like, what was it, 8.1 on the CPI or something? Like, what if we have 7.5, 6.9? This disinflation, it's still high inflation, but it's disinflation. It's coming down. And I see that taking place, but not for years and years. I think that's going to happen fairly quickly. But it's not going to bring the interest rates down. I think that we are going to have interest rates elevated even after the inflation comes down, and even after the Federal Reserve hits their 2% target, whatever the hell that is. they're going to keep the interest rates elevated for some time after that, so they maintain that 2% average inflation over a significant amount of time. So until that starts to happen, then I think interest rates would stay elevated. The inflation, I think that's going to start coming down now. But again, I guess it will also depend on what it is that you're looking at inflation in. I mean, if you consider inflation the expansion of money and credit, well, that's already starting to turn the other way as the Federal Reserve is going into a monetary tightening position. Now, it isn't exactly to the point that they are reducing their balance sheet, like actually trying to sell off treasuries and mortgage-backed securities and stuff like that, but it's no longer in that quantitative easing position. They're moving into a quantitative tightening position, or at least trying to reel in some of that balance sheet exposure that they have, right? Now, even though they're not like outwardly buying like mortgage-backed securities and treasuries, these things come due, gives them a profit, and they're rolling over some of that into new treasuries. That will eventually come to an end, where they will actually take that money that they get back from the maturing of these mortgage-backed securities or treasuries and take that completely off the balance sheet and pull that money back in. Once they start going into aggressive forms of that quantitative tightening, you're going to start seeing some real pain across the economy. But they're not quite doing that yet. I mean, they're hitting neutral right now, and soon they will be going into that restricting kind of policies. But I don't know, like, we don't know how far or how much they're going to do of that. Yeah. Hey, thank you very much. What is that? EVAC 311 for the $10 super chat. I really appreciate it. I think for many people, myself included, one goal is the luxury of more time and resources to use that time as we see fit, not necessarily not having a job, just being free from the rat race. I think that's a good goal to have inside of it, but I think a lot of people have this goal in mind without any idea on how it is that they are going to acquire that. They just want to go for the goal, right? So they don't want to put the work into it. Like you may have put the work into it, but like most people, they just want that end result from it. So, I mean, an individual could take on 2 full-time jobs, save every dime they can, try to live in a, shoebox of a place and retire early, right? But nobody has that kind of like thought or goal in mind. Most people want to earn their paycheck, pay off whatever bills that they have, and then go and have fun with the rest of the money. But that's generally like what most people feel. The idea of not having to work and enjoy your life and just be free to do whatever you want, like everybody loves to have this idea or be able to do it, but very few people have like an actual plan or goal to acquire that in their life. They just want to see like government provide it for them, and that won't ever happen. Like even with UBI and all the tech and all the robots are going to do all our work for us and nobody will have to have a job, I call BS on that. If everybody is all of a sudden given all the money that they need to live off of, then there will be nobody there to provide the things that you need to buy. Like, it just can't happen. In order for there to be a strong economy, you have to have productions and savings, right? Those are the two things. UBI is a straight up non-productive, go right into luxuries. That's what UBI is saying. It's actually, to me, like UBI is the end result of the Cantillon effect, with the new money pouring into the system. When it comes to the point where the new money pours into the system at such a rate that people no longer have to work, they get the money for free, and then they get to buy all the foreign production that they want, that'll end and everybody will be into poverty. It's like, there's no way that system can last. None, right? And I don't care all the books and economic thought that people put out there. If you do not produce and you do not save, your economy will eventually fail. All right. Thank you very much, William Gordon Humphrey, for the 10 Canadian dollars. Really appreciate that. There are more and more that want NATO on the ground, and then all economic bets are off. Yeah, I don't know. To be honest with you, I don't follow the military conflicts out there as deeply as a lot of other people do. I look at like the economic impact as far as like, commodity prices and stuff like that are a result from it. But at the end of the day, like it does have a severe economic impact to the people who are directly involved with it, but it doesn't necessarily change the course of history. Like, I mean, it does. I mean, it does. I mean, because like World War II and Vietnam and all this, all obviously changes the course of history. But it doesn't change the necessarily the outcome of what the economy was going to go through anyway. It's just part of like the bigger picture of what's taking place. It's more of a result of the economy, not necessarily the economy the result of the war, right? So, all right. Who is to say UBI would not be used by some individuals to improve their lot in life, i.e., producing something? Okay, some people will, right? But you give anybody, and I don't care who they are, you give anybody the ability to be a lazy individual, that's what they will do. Like there are people out there who love to work, who love to produce and do things and get out there and just make things happen. But you give most people the ability to be lazy, and that's exactly what they will do. I mean, they will be lazy, and a handful of people will go out there and actually excel at what they're doing. But most people will just be like, I ain't gonna do anything. I'll just go to the beach every day. Until the point that they have to, their UBI doesn't do anything for them, and then they're forced to go back to work. Yeah. I like to save money. It's fun. Yeah, me too. And you know what? So does my boy, my youngest boy. He likes to save money as well. And you know what was cool? We have a flower stand. One of the neighbors grows flowers, and he just has like a flower stand out there. And the youngest one, he wanted to use his own money to go buy flowers for the house. Like he went down there, bought and picked out the flowers and brought them back and put them in a vase and put them on the counter. And that was my 7-year-old. That's what he did with his money. That's what he wanted to do. And I'm like, all right, bud, if that's what you want to do. And yeah, I was like, I was kind of proud of the kid. It was just like he wanted to do something for the family, and it was buying flowers to put on the dining table. And I like that. That was cool of him. All right, I like to make money into more money. Yeah, that's fun too. So, preppers, how are you going to rebuild society when everything collapses if you don't want to take out student loans? I assume you don't know too much about sociology. Um, do you actually have to have student loans in order to rebuild? Is that what you're saying? To rebuild society? I mean, do you actually have to go to college? Do you have to be part of this systematic structure that enslaves people to give them a degree that really doesn't provide them with anything other than a piece of paper? I mean, is that a, is that better for society? I'm just curious. I mean, like the internet and the information that's on there can teach you anything you want to know. I mean, believe me, I barely graduated high school, and now I talk economics from everything that I learned off of the internet. So all the information for anything that you ever wanted to be informed about is out there. I mean, why do you need to go to college? Why do you need to take out a student loan debt? I mean, is that like a requirement for society to be better? Uh, renting to deadbeats is bad business. We rent aircraft hangars. Rules for evicting, auctioning contents to recover past rent. They mirror the rules for storage units. Oh, that's cool. Um, Fists and intentions got us here. They will get us to the next place as well. Huh. Elon Musk needs to be renamed Enron Musk. That's true. There's a shortage of school bus drivers. You need to pass a CDL P test, and most elders are on painkillers. Reason. Yeah, I know we have issues with school bus drivers in our area. All right. The youth believe in automation for overbearing labor services in the U.S. Overbearing labor services. I think that's a matter of opinion. Commercial real estate is the only way right now. Joining late, you talk about silver yet? What do you think of precious metal market in the coming months? Um, I have the same feeling about precious metals as I've had for the last few years, in that I do not look at precious metals as something that I'm going to use to build wealth. Um, there was a time in my life I did. Like, I thought that by buying all the silver and gold and having this stuff on hand, that one day it was going to shoot to the moon, and then I was going to have like all kinds of money, be fabulously wealthy off of my precious metals holdings. I just don't feel that way anymore. There was a time when silver had ran up to close to $50 an ounce, and I was purchasing the entire way up. I mean, I was buying at $20, $30, $35, $40. I wasn't buying lots, but I would buy a little bit every week or once a month or whatever, and I bought all the way up and didn't sell out at $50 an ounce. And I didn't sell out at $40 an ounce or at $35 an ounce or $20 an ounce. And I didn't sell any when it had dropped all the way back down into the teens, and realized that I was really underwater on my, I had put out more in buying silver than I had in value of silver. And that did not make me feel very good, considering that I was already deeply in debt and broke at the time. So I had to take a different position with my mind when it came to the silver holdings. And that's when my car broke down and I needed to buy a vehicle so that I could get to work. Like, I had no vehicle, no money, and I lived out of town. Like, there was no way I could even walk to work. And so I had to buy a car. And that's when I called my buddy up and asked him if he had a Tahoe for sale, or his Tahoe for sale, and if he would trade silver for it. And he says, "Yeah, man, you know it." So he brought the Tahoe up to me, and I gave him 165 ounces of silver, and he signed the title over to me, and I went, "Oh crap, that's pretty cool." It's like an insurance policy, and that's what I considered it. It's an insurance policy. And so it's something that you can have in your hand. It's away from the third party. It's, it's real. It's not something that they can just produce at will. I mean, they have to, work for it. There's really nothing else that's quite like it. And when you consider it an insurance policy, well, it kind of gives you the ability to sleep at night. Like, you're not worried about the bills. You're not worried about other things that are out there, because you have this backup that's outside of that third party. So to me, silver is not something that I look at as far as something that's going to run up over the next few months, or just be like, some awesome thing to have for, all the wealth that you're going to make off of it. I just don't look at it like that. But I do see where in the next few months that we might find where people are going to try and get into as much cash as they can, and they will sell out of the stocks, they will sell out of bonds, they will sell out of cryptos, and they will sell their silver and gold. So if the recession hits really hard, I could see where there could be some buying opportunities for silver coming into the future. The only problem that I find is that when the price comes down to something that's like really extremely reasonable, like you find it back under $20 again, the premiums go through the roof, right? So even though you might find it for $15 out there, you might find $10 premiums or something ridiculous attached to it. So it's not like you can save really any money by, getting it at that point if the premiums are that much higher. And then at that point, then you have to start trusting like ETFs and getting into the paper silvers, and that's investing, and that's not really what I'm into. So, I mean, if you really wanted to, buy into silver or hold silver, dollar cost averaging over time, that's the only way to do it. Buy a little bit once a week or once a month and just put it away, and not think about how much you have or how much you had spent on it, but only think about like how many ounces you have. That's really what it comes down to, is going to be the important thing. All right, babbled on enough about that. All right, thank you, Robert, for the $4.99. If the inflation is caused by supply chain and related issues, isn't raising interest rates hurtful? Yes, I totally agree. In fact, I said that before. Can the Federal Reserve fix an inflationary scenario with the, or not? Can the Federal Reserve fix a supply chain breakdown by the lifting of interest rates to combat the inflation? I mean, that that is a huge question to ask, and a lot of people do not ask that exact question, because if you think about it, okay, so you have products that need to be transferred through the nation, right? You got them sitting at ships, ports, warehouses, rail lines, everywhere out there. There's all this product, and it needs to transfer through the nation. It needs to get through the distribution hubs. And now, if you start lifting interest rates to hold back on the demand, because you don't want the demand out there to cause the inflation to continue to go up, right? So they're going to try and hold back on demand by lifting interest rates. Then if you are somebody who is a supplier or a retailer or somebody who is just an entrepreneur looking to move products through the nation, how eager would you be to try and supply into an environment in which that the Federal Reserve is telling you, we are trying to take your customers away? I mean, how eager would you be to want to start up a business, like you're an entrepreneur wanting to be a distributor or something like that? Then you have to borrow money at higher interest rates to try and sell products into demand that is waning because the Federal Reserve is lifting interest rates. Like, none of that stuff makes sense to me at all. Like, if we had this overwhelming, like, hot market taking place, there's all kind of manufacturing and distribution and all kinds of stuff happening out there, and that was causing the prices to rise, then I could see where the Federal Reserve and the lifting of interest rates, holding back the consumer, would cause that inflation to drop. But if you are trying to stop a consumer from spending when you have issues with distribution, I just don't see how that's going to fix anything. In fact, it's probably going to make the problem worse. You know, in my opinion, it's gonna keep that flow of goods from going through the nation easier. And if that's the case, then you're not going to have anything getting fixed, right? You need to get that stuff moving through the system in order to fix it, and that's not what's going to happen. So thank you for bringing that up. I appreciate that, man. Thank you, Robert. All right. You should watch the Apologies to Jesse Jackson's South Park episode. Okay. The main thing wrong in the bottling business is they wanted to run too fast. Okay. Is it your belief that the Fed will keep raising rates? Yeah, I do. I think the Federal Reserve will continue to raise rates. I think they're going to try and lift it past the neutral rate, which is where we're supposedly at now. I think they're going to try and lift it past that a little ways. They're trying to get their ammo back. I don't think they're necessarily trying to hold back the consumer. I think they would really love to get the Fed funds level, that Fed funds rate, up to around 5%. If they could do that, then they would have nothing to worry about when it comes, well, I shouldn't say nothing to worry about. They would have a whole lot less to worry about coming into the next recession. Typically, the Federal Reserve would want to drop interest rates around 5% in order to combat a recession. By dropping interest rates 5%, you can get people out there borrowing money to buy cars and houses and take out loans to go, credit card loans or whatever to go on vacation. This is what would stimulate the economy. But at 3.5%, even if they were to get it there, dropping it 3.5%, dropping the Fed funds level, I don't think would be enough to necessarily stimulate the economy. They would have to come up with other forms of stimulation, right? Whether it be like UBI kind of thing, or checks coming from the government somehow, or some kind of massive quantitative easing. Something would have to take place. But if they could get the Fed funds level up to that 5%, then they would have a whole lot more room to fight a recession when it comes. I think they're going to try and get as much back of that Fed funds level as they can. And that's why I think they're also doing it so quickly, is that, because the raising of the Fed funds takes 6 months to a year to actually impact the economy, you can funds level up before it has a real chance to damage the economy. And then once it starts to damage the economy, you can drop them very quickly again. But if you take it slowly, then by the time those first lifting of interest rates start to impact the economy, you won't have a whole lot of room to move after that, because people will be like, hey man, you're damaging the economy with the lifting of interest rates. But if you could do it real quick, like get it up there very fast, and then it starts to impact the economy later, well, then you can be like, okay, well, now we can drop interest rates again, but you won't be able to do it slow. So I think that's the reason why they did so much so fast, is to try and get it up as quickly as they could, as high as they could, before it starts to impact the economy and then force them to reverse the other way. But again, I've said it before, I don't think they're going to reverse course right away. I think they're going to let the pain set in for a while, let that 2% target inflation rate run for a while, and then they'll lower interest rates down after that. But they're going to remain elevated for some time. All right, sorry for delay in messages. Can you clarify that distinction? What are we talking about? Okay, they actually going to try and keep raising but stop forward guidance. Yeah, but that's the thing. Even they can't stop forward guidance. They can, if they stop forward guidance, what they would have to do is go completely silent. No matter, there could be no statements coming from any Fed governor or nobody. Everybody would have to stop talking immediately. And even right now, you hear coming from the Federal Reserve in their minutes and stuff that they know that they're going to be lifting interest rates going into the future. They said it. They didn't come out openly to the public and say, hey, we're going to be lifting interest rates, at the next, they don't say it anymore, but they still say it within their meetings. They say that the need to lift interest rates going into the future is still there. They're just not putting it out there for people to understand, right? A lot of people are probably under the impression that they're no longer going to lift interest rates, but I don't think that's the case. Even if they were to, they would have to, like I said, they would have to completely go silent to not have forward guidance at this point. And that's not the case. As long as they're still saying words, that's forward guidance. Even if they say that they're not forward guidance, it is forward guidance. Let's see here. Sorry for the confusion. They recently said we're data dependent. What does that mean? Again, it's they're data dependent on how much they plan on lifting interest rates. Because they said it already. It's they're not when they get to the point where they're saying they're going to be data dependent on whether or not they raise interest rates, that's going to be something totally different. That's really where they are no longer have the forward guidance happening. But right now, when they say that they're data dependent on how much they're going to lift interest rates, that's still saying, hey, we're lifting interest rates going into the future, right? We just don't know how much we're going to be data dependent on it. So we have to see what the data says before we can actually put out there how much we're going to lift these interest rates. But once they get to the point where they're saying, well, we're not sure if we're going to lift interest rates or not at the next one, we're going to be data dependent, that's kind of them going silent at that point. They could really say nothing at the same time. If they had said nothing and say that we're going to be data dependent and to determine whether or not we're going to lift interest rates, that would have the same effect. That would basically be the same result. So that's, to me, is them going silent when they say that. If we're data dependent on whether or not we are going to lift interest rates, not data dependent on how much we plan on lifting interest rates. There's going to be a difference in that. I don't know. Did that make sense? How much time? What time is it? Let's see. I got 27% on my phone. It's, 7 o'clock? All right. I might give it another 15 minutes here, guys, and I'm probably going to bail out. We've been doing this, almost 2 hours now. You guys are awesome. 360 of you up in here. 373 likes. All right. You must be on the West Coast. I am. Let's see here. What's your take on work from anywhere? Can this recession still stand despite stronger jobs market? How will link the two together? Well, I don't know how this work from anywhere or this remote working, how well that is actually working out for corporations and companies out there. I've known a few people who work remotely from home, and although they work hard and do their thing, they talked about how easy it is to do that, and how basically they're not doing anything half the time. Well, not half the time, but some of the time, other than sitting at home and doing what they normally do, or even working 2 jobs at once remotely. I've heard of this kind of thing happening. And as far as a business goes, from a business standpoint, Although it probably is more efficient to not have a building that people have to come to, I don't know how much actual work or efficient work they're getting out of somebody when they're working from home. Like if you have somebody working at an office, then they're like basically being watched over. It kind of forces them to do more. Um, but as far as like what was the rest of the question to that? Sorry guys, I already forgot what the rest of the question was. Oh, now I can't find it. Oh, sorry, man. I lost your comment. All right. Well, sorry, guys. I forgot what the rest of the question was. I guess it's really getting late for me. I'm going to have to go. All right. Work from anywhere works really well when you're paid on your output or per project. You mentioned that you don't smoke, but I would love to have you down here in Alabama to smoke a cigar and talk economics. Well, I would certainly smoke a cigar with you and talk economics. Yeah. Let it rot. Let's see. I like ramen and egg, very cheap. You know, I do too. I ate a lot of ramen and egg when I was a kid. Oh, here we go. There's that question. Okay, what's your take on the work from anywhere? Can this recession still stand despite strong jobs market? How will link the two together? Okay, so I really think the strong jobs market is is going to come to an end. When we really what we're going to have to start seeing is bankruptcies and corporate defaults, like corporate bond defaults taking place. When that starts to happen, that is going to start creating the layoffs. When the layoffs start to increase, the jobs that are all out there that everybody is saying nobody wants to work at, they will get filled, and this tight jobs market thing will come to an end. um, I mean, it's really what I see happening. I just really think that there's a lot of corporations, there's a lot of businesses that are existing here in this nation right now that just simply shouldn't be there. And once they're gone, I don't think we're going to have the same jobs issues that we're experiencing right now. Let's see here. Retail, yeah, I get it, but a good for day grind would be nice. Piecework stuff could work from home. Yeah, I like my girlfriend and my wife. Yeah, I can believe that. I don't think the jobs market is super strong. A lot of tech layoffs. Most jobs I see available are senior level. Yeah, that might be at the like. I mean, at least good jobs available. I see plenty of jobs available, but they're not necessarily good jobs. I mean, when I say good jobs, like good high-paying jobs. What would my team and that would be my team and they work hard. Let's see here. Hoping building costs and building labor will come down. I think you're probably going to be. I just don't think that you're going to have major increases from here. So I don't know necessarily how much they're actually going to come down, but I wouldn't be necessarily scared about them going up. Like, I mean, or at least nervous about them going up dramatically. I think most of that has probably already happened, and that most of what we're going to see coming into the future is going to be either stabilizing or even in a lot of cases probably see some building materials come down. But I just don't know if it's going to be a lot. Maybe in the labor side of things, if things really start getting, hit hard. But as far as like the rest of the building materials out there, other than say like plywood and framing lumber, most of that stuff is still quite elevated. All right. Last question. Zombie companies, when and how they default in a recessionary environment. Oh gosh, we got this damn scammer up in here. Let me see if I can get rid of this guy. Hide this user. Okay. Okay. What was it? When and how they default in a recessionary environment? Well, okay, so how and when is a very it's a very open question. Like, I mean, you can kind of see what the environment may look like by going and watching what happens with these property developers in China. China, like, they did it. Like, they were the first ones to go into a tightening cycle. Like, they were the first ones to ease after COVID or during COVID, and they were the first ones to go into a tightening cycle. And they said it. They wanted to take out a bunch of different industries, and one of those was the property developers. They said that these guys had pretty much gone into irrational exuberance, and they were creating some hell over there by, I mean, I guess the easiest way to explain it is that they've borrowed far too much money to create projects that nobody really was able to profit from. Right? Because after these properties started getting sold and the payments were no longer able to meet the demands from the creditors, then these corporations like Evergrande, it didn't matter how many projects they had out there. Like, even if they were to go off swimmingly, they weren't going to be profitable enough for Evergrande to continue to stay in business. They had to continually borrow money. And when the interest rates started to rise, they weren't able to borrow money. Or they could borrow it, but they couldn't borrow it at the same payments. And so therefore, they weren't able to borrow money to pay their creditors. And if they can't pay their creditors, then they start having issues. And that's really what started taking place, is that their bonds were going to start defaulting. And that's when they started to have to sell off some of their assets. That started creating problems over there. So, like, the way corporations start to fail is going to be different for everybody. Like, it doesn't matter who, whether you're a property developer or one of these fintech companies or something like that. What it comes down to is the interest rates rising and not able to borrow money to pay off your creditors again. So if you can imagine taking out a credit card to pay off an old credit card, but the new credit card has a much higher payment to it, then borrowing money to make that credit card payment is going to be very difficult. And that's really what they started coming into. So as far as, like, what is it going to look like? I mean, it's going to be different for everybody. I mean, think about, like, some of the corporations and companies that started failing during the great financial crisis. I mean, all that had to do with, like, the housing market and all these, like, mortgage companies and stuff like that. Think about all the corporations that started to fail that were involved in construction companies. I mean, these are unforeseens that are going to happen out there. And I couldn't tell you, like, what that environment's going to look like and what corporations are going to get hit first. I mean, I could see where a lot of these tech companies are going to get hit. I could see where, like, the manufacturing, like, if you are a manufacturer here in the United States who has done quite well during the pandemic because you were competing against foreign production that just simply wasn't coming into the United States, well, that foreign production is going to start coming in at some point again, and then you're going to have to compete. So a lot of these domestic manufactured had ramped up production so that they can meet the demand that wasn't being provided, like, because they could meet that demand, but that demand wasn't being fulfilled by the foreign production because of the supply chain breakdown. So these domestic manufacturers, they ramp up production. Well, then the foreign production starts to come in, right? The foreign, produce, items. And now the domestic manufacturers can't compete with that. Well, then they start to default. So you can see they're not necessarily zombie corporations. They just overexpanded into an environment that they shouldn't have done. They should have just stayed the way they were. But because of that overwhelming consumer demand that just simply was false, they overexpanded, and now they're going to fail because of that. So, I don't know. Anyway, let's move on. Hey, thank you very much, Levi, for the $2, the $2 Canadian dollars. If the apocalypse comes, what good is your gold? Well, that's a good question, but then what good is anything out there, right? I mean, if the apocalypse comes, then there's not going to be any gas, so there's no point in even having a car, right? I mean, so, like, I'm not into the Mad Max scenarios. Like, if that's the level that we have achieved as Mad Max scenario, I don't know. The only thing that's really useful at that point is firearms, and I don't envision that kind of life or world. I mean, I can see where things could get difficult. I can see where you'd want to have the ability to protect yourself and your family or your stuff. I can see that kind of scenario coming. But as far as a full-on, like, total chaos, like completely no rule or order or anything happening, I don't think that's going to happen. And if it does, it doesn't really matter at that point. You're going to be fighting for your life. So Uncle BlackRock will take good care of you. Well, maybe. Let's see. Nick, I just assume that the government is manipulating depending on what story they need. Example. Okay. Alrighty. Well, guys, I think it's getting late, man, and I should probably go home. So, any last questions before I go? I can tell the WFH staff when I hear Maury Povich, Jerry Springer in the background. That's funny. Alrighty, guys, I'm gonna head out. Uneducated Economist, you guys let me know.